Hello and welcome. It is Sunday, 28th day of January 2018. My name is Derek and everything is within your own risk and own reward. Let's talk about trading. As this move up here was a place where you just wanted to get into Litecoin. It was going up high. But then back in May, it was going down. So you really wanted to cut your losses and sell. But then after this green candle, I want to get back in. So you want to buy and you see it's doing well. Buy some more. And unfortunately, it's crashed a bit, so you want to sell out of some of your position. And it's going down hard, so you want to sell a lot here. But then it's going back up, so you were wrong. So you want to buy, and it just starts to go down. And you want to hold for a bit, but no, you get out here. And you're right, you want to get out some more. And then all of this happens, so you're back in again. And that's the opposite of what you're supposed to do. And I'm going to use Litecoin going back to its start. This is a 4-day time frame. I pretty much spent the entire day on Saturday talking about this strategy. So I'm going to go over its entirety. Three different three pictures, charts will be used to go from its entry time to today. So let's get started back in time. And what's been going on is the start. It's 2014. Market's been in a downtrend. Obviously, if you start in here, if you bought, that's where you would start buying. But let's assume that in the October time frame with that circle at the bottom, you see the market's down a bit, put an entry position in, and you're going to sell if you have any decent move that can break the 18 average. Of course, none of that gets even close for a while. You can't know that. And if you did know that, well, then you'd wait to buy. But you're playing this because you never know what the market's going to do in any short-term movements. Long-term, you're expecting big, huge pumps higher, which has been the case, and the prices to do well, of course, long-term. And that's been the case as well. So you buy on the red candle down before the end of 2015 because it had broken down the key level of support. At the end of the period, you would see that it's down at its lows. It's really a no-brainer situation to buy. However, if you bought at the lows near 2015, then that would have enabled you to sell at this 18 average of highs. But if you didn't, I probably wouldn't here. After this red candle down day, I would have been like, you know what, if this thing even has a little bit of a fall, I'm going to buy right in here. But it never did that, of course. Starting in March of 2015 in here, this is, you have to have buy orders if you can. I mean, this is an obvious spot. If you did have a buy order in at any decent price, you sell some of that immediately. And if you were to sell that immediately, you would have been able to buy back before this low. Only because of this sale in here. And then at the start of May, the market finally reaches its peak and goes up. And you can see that on the first green candle, where the first circle is, you would have 1 day, great gain above, you sell a position. You're looking to buy back at a move at or a bit below the 18 average. That never happens. And then as you get new gains, as the market keeps going higher, then you just got to pick away at gains here and there, whether you got the top or here. You should have got some of these places because sell orders should have been in. If you got this one in here as your highest, then you should have just missed this probably. Regardless of the fact, when you have major buys above the 18 average of highs, then I would deem it all right to buy at or near the 18 average of highs. So the circle in here, this one would only be if you sold relatively high. And when you have the spot, as the market would play out now, you don't want to buy unless you have a significant break below here. And even an okay break, given that it's already a bit below. An okay break would be fine. Of course, you already have a whole bunch of buy orders in here. And any nice green candle move well above the 18 average, sort of like started at the first one after the May 2015 time frame, would be enough to sell. So let's move on to what happened post September 2015. And the market kept going down. The last buy that we talked about is at the start of this time frame now. So the next one after that came after November. At some point here, it would have been enough to buy in here. Now the one before 2016, you're in a situation where it was grinding lower. And if you didn't buy within then, it would have been tough. At some point, you'd want to possibly get another buy-in. If you didn't, then you really would have a hard time selling on that May rally. But there's a situation in May where the market grinds so major to the upside. This is what a true grinding the market is, right in here. So after one of those later periods, you're like, man, I just got to take a little bit off the table. And if you did, that would allocate you able to buy this. If you didn't, then you wouldn't buy here. Either way, you'd be buying here, and this would have been an easy one because it has what the end of this chart has. A key break of support at a price point significantly or well enough to buy from where you did before. Now the buy in September, the second last one, there's another situation of it grinding lower. So at some point there, maybe even a period or two before I circled it, you're gonna have to buy somewhere. If you go like 8 straight periods in a row with small loss after small loss, well, 8 straight periods in a row down is like one decent sized down one as well. So therefore, when I see like stuff like that, you know you're well lower from your last buy point, and you're just just gotta buy now. So we're gonna move on to the last chart, which is the one to current, which ended, of course, with the November buy. And that wasn't the bottom, of course, because it went down again at the start of 2017. And if you can ever buy significantly lower than the 18 average of lows, like we see at that point, where it's got the just a good wave lower, and very quickly, in this case, a couple periods go by, then you can sell. If you sell, generally speaking, you got to go at least below the 18 average of lows, maybe your previous support level as well. Now, at the end of, at the bottom, you definitely had to buy at some places. I wrote it in where I circled the decent sized red candle down day because this was an obvious buy spot here. And sorry about that. I don't know why that does it. Anyway, so you're in a situation where if you bundle those spots, you see on where I have it circled, the market finally gets out above the 18 average of high. So it's a spot you're selling. You're not looking to buy back until it has a clear break below that 18 average of lows or anywhere near the previous low, but it keeps going up. So when you see the big green candle, which is followed with about a dozen or close to that of extended gains, what was obvious was there was never a buyback situation in any one of those days. However, this is another form of grinding your way higher, where you just have to take some gains here and there. There's many buy order fills you've had done that you can take for sweet profits now. And when you sell anywhere near those decent areas up there, it is a no-brainer, easy play when you have about 5 consecutive periods at the 18 average of lows. And in this case, it worked out. Not always will that be the case. As this in here, pretty easy to get back in for what you sold well above. And we can see another situation with a very fast one candle move like this. You take your sell. If you sell a little bit above the 18 average of highs like that, price action had that the resistance you had over the few days would have been where you'd look to buy back. Of course, that never happened. And then you have in July some days grinding higher to where the top currently is in place. So if you're able to get either one of those 2 days, then congratulations. And if you did, that would enable you to buy at the 18 average of lows, which then would go further. So you have 2 red candle down days. So which day you choose, if you take a little bit of both, either way, you're going to be able to sell at the highs, because now that it broke the 18 average on this day, it was able to sell. And you're seeing a lot of range bound market, which makes it very difficult to buy here. But if you did, that would still work out well, fine. But you really have the choice of buying here or buying here. And I thought when I was going through this, just looking at it, when you see it going sideways like that, that's the best play. And then you have a situation where this was an obvious buy in here because of the red candle down day. Big time differential variant from where you last bought before. If, of course, you got any of this in, congratulations. But I probably could see where I would miss this, actually, because I'm looking for a leg lower. So even if I'm watching the charts live, I'm still going to wait a bit, and it never would have happened. But when you see the markets make this rally, which happened in December, you have to sell some in that spot, because buy low, sell high. And where you would stand now is nothing has been done since. If you sold at the tops near the 20 handle, I don't want to buy this now until, well, basically around the 15 and lower, 14, a move at or a little bit below the 18 average of lows as my next buy. And for a sell, I need a decent break above resistance. I'm not going to sell below 20 unless I get a buy order fill. If I were to do so at around 150, 140, 130, then I could look to sell on any immediate breakout. And of course, any of these gap fill moves down at the 10 is a no. You're definitely buying if it's by 10. That's a no-brainer. And any of these points. And if you have an amazing move that breaks resistance, and say the price goes to 0.05 or 0.07, you're going to be looking to sell, and then the markets would look like it did before in March. You just have a whole bunch of big green candles up, and that's just what the bull markets look like within this crypto space game. So that is the general way within such. Of course, this is doing this more longer term on a 4-day chart. You could do this on a 15-minute time frame and play the gains it gives you, although that's a lot more riskier, I would think. Of course, I think that would work well when you know it's in a good bull market, but for its time frame, that is. But I'm very bullish on Litecoin, so I like to use a strategy like this. I'm probably going to implement this more for the long term, which means I'm not going to be buying any kind of decent size amount more, and I've already got a lot as it is, unless we get a number closer to this 1 handle. Thank you for tuning in, and have yourself a great day. Bye-bye.